Okay, well, hello everyone on this blazing summer day. I bet it's cooking no matter where you are in the United States. Got up to 115 degrees in California last week, and believe me, thank goodness I live near a beach. So this is John Thomas, the Mad Hedge Fund Trader, and how to play the year-end rally. Now, it's not too soon. You need to start positioning yourself now because the moves are going to be really big. I'm looking for a 1990s replay with the same result, meaning we could have another 4 or 5 years of tech melt up to go before the inevitable crash follows. So let's tell you how to play it, what to buy, what to sell, what to avoid, and what's really moving this market. Go ahead and put your questions on the right. And when I get some free time, I will address them. So take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life. For I am in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why you're doing that. So we will get on with the show here. Okay, so why listen to me? Well, 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, 16 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry that is still working. And the other reason to listen to me, average annualized return for 16 years, 51.62%. We are running at about double the S&P 500. This is the S&P 500 down here in orange. We're doing somewhat double that up here, just past a 700% total return since inception. And we don't have downs. We don't have drawdowns. We don't have corrections like the S&P 500 did down here, here, and here. And here's another reason to listen to me.
Okay, go for it. Hi, my name is Wilson, and I've been with Mad Hedge Fund Trader, John Thomas, since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80–90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
So thank you very much, Wilson. Had lunch with him just a couple days ago. Sorry for the background noise, but he just insisted on telling his story because he's made so much money. Of course, this is my secret weapon hand, the Mad Hedge Profit Predictor. That is our in-house market timing index. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took a team of mathematicians 1,000 hours of calculations to come up with this thing, and boy, does it work. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you are trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. Here is 3 years of buy and sell signals from our market timing index. You see we get lots of buys at market bottoms, lots of sells at market tops. Buy, sell, buy, sell. It's like having a money printing machine. And of course, I'm not the only one using algorithms. Some 80 to 90% of all current trading is now algorithm driven. Obviously, it's working for more people than just me. I was walking on the Miami waterfront a few years ago, saw this super yacht, and look what it was called. Algorithm. Yes, thank you very much, Mr. Algorithm. This is the actual daily report, or actually hourly report, for the last 2 years of our market timing index. And you can see we peaked for 5 months, starting from November last year, going all the way to March, then collapsed when we had the April correction, shot back up. So was a buy here in October, another buy here in April, another buy here in June. And of course, the market rocketed right up after that. And we knew about it ahead of time. Yeah, call it legalized insider trading. That's really what a good algorithm does for you. Right now, we're stuck in the middle of the range. We've been stuck in this middle now for 2 months, between 40 and 60. What you really want to do is do your buying when the algorithm is down at the 20 level, and take all your profits when it's over 70. So again, buy, sell, buy, sell, buy, sell. I expect another sell-off going into the election. I'll tell you why in a few minutes. So why cover all asset classes at once? Well, information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do, and therefore interest rates, is incredibly useful advantage when picking stocks. Some asset classes will be doing great while others are dead in the water. And for example, this year we had 7 that were doing great and the rest were going nowhere. It will point you to where to trade winners and avoid the losers. Give yourself every advantage. Knowing what's happening all the time, everywhere, is incredibly valuable. There is a method to my madness. The cool June CPI was a real game changer, assuring a slower economy, lower interest rates, and most of all, lower inflation. Leadership flipped from big tech to industrials, precious metals, financials, and bonds, which will be active for the rest of 2024. The first interest rate in 5 years is going to be on us in September. That's now a certainty. All interest rate sensitive sectors caught huge bids. The US dollar is getting dumped and could stay weak for years. Technology stocks will recover after a correction lasting months and then run up to new all-time highs. Energy is getting dumped on recession fears if the Fed acts too slowly, but also on overproduction caused by massive tax benefits. So buy stocks and bonds on every dip. Precious metals, one of my favorite new sectors right now. Silver has gone ballistic on Chinese speculation to 32.70 an ounce. It's headed for 50. Gold follows by half. In other words, gold moves at half the rate of silver. It's headed for 3,000. Solar panels are driving global silver demand. Global investment in solar PV manufacturing more than doubled last year to around $80 billion. Miners are expanding their operations, ramping up production as prices for the precious metals climb to decade highs. Demand for silver from the makers of solar panels, particularly those in China, is forecast to increase by 170% by 2030 to roughly 273 million ounces of silver, or about 1/5 of total worldwide silver demand. So buy silver and wheat and precious metals on dips. And that's me in the Istanbul gold market, where my friend Norman Hallett is heading. This is the gold medal, the GOLD. We've been strong into this all year, buying every dip. Just hit all-time highs last week. We're looking for 3,000 sometime next year, or about 30% up from this level. Barrick Gold, if you like gold, you're going to like the world's biggest gold miner. That's Barrick Gold. It's also had a tremendous run from 1375 to 1950. It's about a 50% move. We're targeting $40 or another 105% by sometime next year. The Silver Trust, which holds physical silver in bank vaults in London, that has been on an absolute tear, going from 20 to 29, about 50%. We're targeting 50 next year, a gain of 70% from these levels. And if you like silver, you really like the AGQ. That's a 2x silver ETF. It has doubled from 23 to 46, and we're looking for it to hit 90 sometime next year. So load the boat on dips on the AGQ. And what are we having right now? A dip. And the market's open. So go buy some. Stocks just saw a blow off top. Money is pouring into equities with investors buying a net 21.7 billion worth of equity funds during last week. Bank earnings beat expectations. The stocks are rising in expectation of falling interest rates, with JP Morgan, Bank of America, and Citibank reporting. Wells Fargo bombed again. They seem to never get out of the penalty box. Buy banks on dips, which have been on a tear. Small cap stocks are poised for major chart breakouts after no performance for years. Remember, 60% of these are regional banks, which would love to see lower interest rates. Guess what we're going to get? Lower interest rates. Netflix growing subscribers like crazy, but the stock sold off on the news like it always does, following a crackdown on password sharing and viewer attention moving to sports because of the Olympics. CrowdStrike, of course, crashed a lot of the computers in the world, especially in global transportation, costing airlines billions. And a new China chip ban sent tech stocks tumbling. And China itself looks like it's going to remain in the dumps for a while. Its high growth days are over. So this is what was in the market before and what's going to be in the market next. So what got us here? Well, high inflation, an oil shock, labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. What happens next, which all happen to be stock positive, plunging gasoline prices, rocketing commodity prices, stabilizing supply chain, 4.1% unemployment, better than expected earnings, 1.25 trillion in stock buybacks, falling interest rates, and a weak dollar. We do have a presidential election muddying the waters this year. With polls unreliable, uncertainty is at a maximum, and markets hate uncertainty. So look for the market to drift sideways to down going into October. Once the election is over, markets will rocket as uncertainty disappears. Makes no difference who wins or which policies are implemented. Markets are going to go to all-time highs driven by artificial intelligence. With markets at all-time highs, you may not want to buy right here this second. So 90-day T-bills are offering a very nice 5.25% yield. That is still a great option. So buy any weakness in stocks and bonds that comes in coming months, and I'll show you why. We run barbell portfolios, which are 75% big tech. That's 2% of the U.S. workforce, 25% of market cap, and 25% of U.S. earnings. And we also buy domestic recovery stocks, which are low interest rate plays, including railroads, airlines, cruise lines, industrials, couriers, steel companies, interest sensitives, banks, commodities, housing, construction, credit card companies, hotels, casinos, and online ticket sales. So here's the NASDAQ, far and away the leading index of the year. We are at 17,750 right now. We'd be buying any weakness from here. We expect another 17% in NASDAQ by the end of the year on its way to 20,000. And these blue boxes are buy and sell signals from our market timing index. Got a very strong buy at the end of the year, and boy, what a great call that is. It's basically been straight up ever since. Microsoft, another leader in AI, look to buy the dip. We're targeting $600 by next year. Meta, another big AI leader, bought last October at the lows. It has been absolutely on fire. Look to buy any dips, looking for $600 here. And Amazon knows everything you bought or thought about buying for the last 25 years. You think that's worth something? We're looking for $250 for Amazon by the end of the year. That is up from 140 at the beginning of the year. We just keep buying every dip and loving it. And NVIDIA, of course, the golden boy of the market. We actually have been trading this for 10 years. When it first went public, our split adjusted cost back then was $5 a share. It's now at, 120, and we are looking for 180 by the end of this year. So another 50% gain in NVIDIA. Look to buy any summer weakness that we get. And Google knows everything you searched for over the last 20 years, or even thought about searching for. That has also been explosive. We've owned this since October, buying every dip, and we're going to keep on doing that. Our target for this year is $250 a share. Palo Alto Networks, because hacking never goes out of style, and its main competitor, CrowdStrike, just blew up, crashing the world's transportation computers. So the big three cybersecurity companies have a near monopoly in the sector, and boy, do I love buying into monopolies. We're targeting $400 a share this year. Second half of the barbell bets on falling interest rates and a global recovery to begin in the second half of this year. Upside potential for recovery stocks in 2024 is far greater than tech from here. Some of these stocks have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to high growth technology. We could spend the next 2 years rotating back and forth between the two groups. So JP Morgan, front runner in the banking sector. All of these banks are cheap. We're looking for 250 a share this year, up from the current 210. And of course, we've been buying dips all year. Actually, for the last year and a half, here, and we're going to buy down here again. You just can't lose money on this. Visa has the near monopoly, a duopoly actually, with MasterCard on credit card charges. They're selling off on some recent antitrust charges and some fee settlements. Look to buy this dip. We're looking for $300 a share by the end of the year. And Union Pacific, in any economic recovery, you need to move a lot of big stuff. Union Pacific is tops in this stuff, and it is essentially an AI technology company on its own. Federal Express has already made a giant move. We've been buying the dips all year. Look to buy any dip you get, looking for 300 a share there. Berkshire Hathaway is basically a one-stop barbell company because it has a huge holding in Apple and also is a very heavy investor in financials, especially the banks. So again, they had a big melt up, which coincided with the tech sell-off. We caught all of that, made a lot of money on it. We're looking to buy dips. See $500 in Berkshire by the end of the year. Freeport McMoran just sold off on their earnings, as they always do, but there's a coming copper crisis because of the explosive growth in EVs, solar panels, grid expansion, and wars. You still need copper for old-fashioned artillery shells, which they're using a lot of in Ukraine right now. We're looking for $70 a share sometime next year. Moving on to another asset class, bonds were a terrible asset class to own until recently, and now it's beginning a multi-year trend upward. Cold CPI in June assures September interest rate cut, sending all fixed income securities soaring. Bonds are holding their gains even in the face of a summer stock correction. Bonds have seen the biggest cash inflows in 3 years. If you want to get a really high yield, you should look at BB bank rated loans. I know that sounds kind of obscure, but 8.48% yield works for me. Top ticker symbols, here they are: SLRN, BRLN, BKLN. Check them out. Keep buying every fixed income play on every dip you can find, and I'll show you why. Here is our major turnaround, a very clear head and shoulders bottom on a long-term trend. We were playing from the short side for years as bonds collapsed all the way down into April, and then after that, we've been buying every dip, and that works. And we're expecting a major breakout to the upside in the TLT. It's gone from being the short of the century to the long of the century. We're targeting 110 for this year, and maybe even 120 or 30 next year. So buy TLT on the dips, and yes, they do have options. Here's the yield. We expect it to fall from a high of 5.08, going down to as low as 3.5% this year and 3% next year. So that means buy bonds. Foreign currencies, you can kiss the dollar goodbye. It's taking it on the nose. It's falling against all currencies, even the Japanese yen. Coming decade of falling interest rates makes the buck a big sell. The prospect of falling interest rates means that the greenback is toast. It's all a response to the blockbuster negative consumer price index that we got for June. So buy all the currencies, which are the FXA, the FXE, FXB, and the FXC. Avoid the Chinese yuan. It has bigger problems to solve. Here's the Australian dollar, major bottom down here at 63. We're looking for it to go 1-to-1 against the US dollar in coming years. And emerging market currencies are the high beta currencies. They also have begun a major move upward that will extend for years. We're looking for a 40% gain in 2024. Euro also has been doing great despite the Ukraine war going on, looking for new highs and a 25% gain this year. And energy and commodities, the worst performing asset class. And there are a lot of reasons why that's happening. Oil production's at all-time highs, as are energy profits, and is producing more oil than any other country in history, over 13 million barrels a year now. World set a record last year, averaging at 12.9 million barrels, exceeding the Trump era record, an average of about 12.3 million barrels per day in 2019. U.S. production of dry natural gas also hit a new high last year, as did our crude exports. Overproduction crushed prices and made energy the worst performing stock market sector in 24. Gasoline demand is in long-term secular demand since 19. A lot of people now fly instead of drive. When they drive electric cars instead of gasoline-powered ones. So yeah, very long-term secular decline in gasoline demand. People are shifting out of EVs into out of gasoline engines into EVs and planes. So here is the price of oil. Got a peak up here in April, secondary peak in beginning of July. We're looking for no lows. If you are inclined to trade short term, you may buy down here at $73 a barrel. You may get a $10 pop out of that. And in a major economic recovery, you could get all the way up to 95. But the long-term trend is down, down, and down. I think we revisit $10 a barrel that we saw during the pandemic. And I actually bought oil at negative $5 a barrel in the futures market during the pandemic, and I got stopped out at 10. It went all the way down to negative 37, if you can believe that. So yeah, no one wants to own oil when their demand is fading because the storage costs are very, very high. This is the harsh truth, and this is why you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why did dead people do so well? Because they never sell. And when the market's in the process of going from 600 to 40,000, as it has done for the last 40 years, never selling is not such a bad strategy. I mean, that's what Warren Buffett does. He never sells, so he never has to pay taxes. Let a real pro guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 51.62% average annualized return versus 25.87 for the S&P 500. It's a performance most of you would kill for. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying over the California coast, and sometimes he lets me fly them. Greg turned 100,000 into 3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough money left to send 3 kids to college. And here is another friend of mine who loves the service.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's global dispatch service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it. And I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
Okay, so what do we do about all this? Stocks, you want to buy the next tech dip. Bonds, you want to buy dips. Commodities, buy dips. Energy, buy the bigger dips. Currency, buy foreign currency dips. Precious metals, buy dips. If you're not up 51.62% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 51.48% for the last 16 years. That's an average annualized return. You get that kind of money, you get to do things that other people don't get to do, like take the Queen Mary from New York to England. When you get to England, you get to take the Orient Express from London to Venice, and from there on, you can do whatever you want. This is the very long view, and here's where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a new golden age results from a global demographic wave. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on this economy, fade from the scene. That will create an economic boom that will last another decade, starting from last year. Now, the last time we had identical demographic tailwinds, which was from 1982 to 2000, the market went up 20 times in 18 years. Are you ready for a replay? Well, what would such a replay look like? Well, if we go up 20 times from the 2009 bottom in 18 years, that takes us to Dow 120,000 by 2030. If you think I'm crazy, look at where we are. We're already 2/3 of the way up from that 2009 bottom. So from 40,000, which is where we are now, suddenly 120,000 doesn't seem so far away. It's only one more triple away. Except this time it's different. We now have artificial intelligence as a turbocharger. Technology is hyper-accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So he'll show you how to play the next 90,000 Dow points. Sit with me, John Thomas, the Mad Hedge Fund Trader, and my global trading dispatch. Discover how you can tap into the top trade mentoring service in the industry, up 51.62% a year. Follow my research and market beating trade alerts, and you will rake the money in. Let a Marine combat pilot steer you to big profits. I trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month for us. You can see I bought the S&P 500, made 16.3%, sold short US Treasuries, made 8.6, bought the Russell 2000, and so on. 10 out of 11 trade alerts made money. We're trading in all asset classes, long and short, all the time. You never have a shortage of ideas. Just a matter of time before barbell stocks blast out to new all-time highs. Watch this space going up for the rest of 2024. Get ready to start reeling in those whoppers with Global Trading Dispatch. And yes, that is a 24-inch trout I caught in northern Nevada. Here's how it works. Our algorithm predicted an upside breakout in NVIDIA at the beginning of the year. So we sent out a buy alert by email and by text message. And what does that look like? It looks like this. Buy NVIDIA at 480 or best. Split adjusted, that's $48 now. It's an opening trade. There's the date we sent it out. We suggested you put 10% of your portfolio in there, or $10,000. That equals 21 shares. And what happened? Well, it went from 480 up 45% in 22 trading days. Then our algorithm said sell. So we sent out a sell alert like this: sell NVIDIA at 695 or best, 69.5 split adjusted. This is the trade date. And $10,000 investment made $4,515 in just 22 days. We send out hundreds of these every year. You never have a shortage of ideas on which to trade stocks, options, or ETFs. So here's our Hall of Fame, our 10 baggers, stocks we recommended that went up 10 times or more. They include Zoom, which went up 10 times. They included Lam Research, up 10.6 times. They included NVIDIA, up 30 times, and Square, up 25 times. Moderna went up 40 times. We recommended it pre-pandemic. Tesla up 178 times. So those are the kind of numbers that we get. And of course, we took profits on Tesla and started buying again just a couple of weeks ago in the high 100s. So I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full-time, as many of our followers now do. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. With my Mad Hedge Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, about 200 a year, and the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A like this one. Special reports on urgent investment topics. Invitations to strategy luncheons around the world. And I'm having one in London, England in 2 weeks. More educational videos and webinars than you can consume in a lifetime. Access to a 16-year database on investment ideas, searchable by names and ticker symbols. And I'll even give you the name of a good surfing camp in North Africa. Watch out, it's a lot harder than it looks. This is the one-stop shop. You learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get. You get in your inbox every morning my Global Trading Dispatch with a research piece on an individual trend or company. You also get Mad Hedge hot tips, the 5 most important things that are happening today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge clients who get my personal cell phone number. And this, I'm not going to charge you $3,500. That is the full price available on our website right now. Only for you, in this presentation only, creating this product cost me millions of dollars. With the best customer service in the industry, running it costs me millions more. Let's see, 6 months for just $997. That's a 71.5% discount to my website price. It is a limited time offer. We only take 25 new subscribers at a time, so we don't overwhelm the market with too many trade alerts at once. It's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right, and you can see David has put in a link in there, madhedgefundtrader.com, and that'll take you to a dedicated sales page, only valid today. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. And we'll give you a money back guarantee. If you're unable to make money with our service, you can get 100% of your money back at any time. 6 months for just $997. Just click on the chat box on the right. And if you buy now, you will instantly get a trade alert that you can execute immediately because the market is open with an extremely high probability of success. Don't leave good money on the table. 95% of these trade alerts make money. And just to give you a tease, this is the chart for the trade alert I am going to send you. Well, I'm not going to tell you as if it's a buy or a sell. For that, you have to subscribe to our service. You have to go through 1,000 charts to find one that's good, and our AI algorithm can do that faster than you can blink. So who is John Thomas? If you're going to work with me for the next 6 months, it's best to find out who I am. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American dream, playing Little League Baseball and becoming an Eagle Scout. There wasn't much to do in rural California in the old days but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold them at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. Ta-da, stock market. As a foreign correspondent, I covered China during the Cultural Revolution and was the first American reporter to visit North Korea since the Korean War. I covered all of Asia all the way out to India. I figured out very quickly you didn't have to be that smart to make money in the stock market. Otherwise, Wall Street would have run out of smart people a long time ago. So I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. And yes, the years have been cruel. That's my 1984 or 1983 ID card, which they issued. And man who signed that card died in the World Trade Center collapse where Morgan Stanley had 30 floors. And that's me losing the All Japan Karate Championship. Never enter a karate championship with a broken wrist, which I did. Ouch. This is my time with the U.S. Marine Corps during Desert Storm. I flew as a pilot and also briefly commanded a tank brigade. That's an M1 tank. And me with minimal training can hit a target at 2 miles thanks to our infrared targeting system. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. And that's my entry at the Pebble Beach contest. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account, turn it into 500,000, that's more job satisfaction than I could get anywhere. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. And if you see an old plane flying loops over San Francisco or London these days, it's probably me. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires broke out in California, I hit the main evacuation centers and handed out $10,000 worth of Target gift cards. So when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. And I promise not to tell who. So it's in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hitch concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which today are worth more than $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we still managed a brisk 250 miles an hour over the countryside. It was actually built to do 450 miles an hour. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a clear piece of sky over the White Cliffs of Dover between 2 big, fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time was no different. I executed multiple loops, barrel rolls, sandels, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you, as well as I have done for thousands of other followers over the last 16 years. I work forward to working with all of you. And let me check my store and see if anybody has come in. And the answer is yes. Let me take a look here. Okay, we have Jay from St. Petersburg, Florida. Thank you very much, Jay. Look forward to working with you, and check your inbox and get that trade alert and execute it right now. Okay, we have Karen from Cody, Wyoming has come in. Eric from Flagstaff, Arizona. We have Adam from Durham, South Carolina. Thank you very much, Adam. Anybody else wants to join the party, just click on the link on the chat box on the right. And it looks like I have a few minutes for questions. So let's see what we have here. And David, if you have any questions, just be happy to jump in. And we have more people who have come in. Let me take a look. Mm, mhm, mhm. Okay, we have an order from Ed from Virginia Beach, Virginia. Thank you very much, Ed. Check your inbox for the trade alert. And we have here, see, it is Charles from Nazareth, Pennsylvania. Charles, congratulations on making the best investment decision you ever made. And check your inbox for the trade alert. And let me read another question here. And this is from Ari. It's from Ari. If I understand correctly, I get lots of trade suggestions and then can choose what I want to do or not. Is that how most people do it? Actually, it is. What most people actually do is they watch the first couple of trade alerts. If they if those prove to be successful, then the next one they'll do one contract. We do stocks, ETFs, and options. If you're an options trader, this is a dream come true because it gives you which name, long or short, and what is the best option combinations to get the highest profit with the lowest amount of risk. And after people make money on one contract, then they increase the size to 2, 3, 4, 5. And the big players eventually get up to 1 or 2,000 contracts. And that is the exchange limit for a single security. I have hit it many times myself. Okay, let's see if there are any other questions. Here's one. Do you trade only stocks, or do you also give option ETF recommendations? The answer is yes, we do. Every trade alert gives you the option of doing any of the three: stock only, options, or ETFs. And I can tell you over time that the stock players make the most money. They get the biggest gains because their positions don't expire, where stock holdings last forever. So, if you got into NVIDIA at 5, you were much happier than if you just bought a call spread at 5, like a 5-10 call spread, or even a 5-10 leap. Yeah, that is exactly what we offer people. Okay, here's another question. Can a basic beginner do this? I've never traded options before. How hard is it? Every trade alert we send out has a link to a 20-minute video that teaches you exactly how to execute this trade in the markets. And if you still have questions, then you can email us and we'll email you usually back in a couple of minutes. Depends on how busy the markets are. Okay, let's see if we have any other questions here. Let me see if I can back up. Oh, here we go. There's a backup. Okay, so let's go back to some of these other pages here, and let me get the sign up page on the screen. Okay, so there we are. Click on the chat box on the right. David just put the link in there again. 6 months for just $997. Okay, David, any questions on your side?
I'm not seeing anything else.
Okay, let's see. Let me check a look and check my email. And here's a good one. Are we in an AI bubble? And the answer is absolutely, we were in an AI bubble. But we were in an internet bubble in 1995 or 94, and it went on for 6 more years. So yes, we are in a bubble, but it could go on for a lot longer, and stock prices could triple from here, and the indexes could triple from here if history is any guide. And if it doesn't go on for 5 years, if it just goes on for 3 or 4, you can always just stop out of your last batch of positions. If we ever have positions that lose money, we issue stop losses immediately. We think it's time to get out, and that way we can limit our losses to 1 or 2% of your portfolio. Any hedge fund manager worth his salt has a very aggressive stop loss strategy. Nobody's perfect all the time. We're right about 80% of the time, which means 20% of the time we have to stop out, and that's just the reality of markets. Black swans happen. For example, a presidential candidate can resign. Whoever would have thought that happened? Yeah, you have to be ready for the black swans at any time and make sure that they don't take you to the cleaners. Okay, let's see. Any other questions here? Do you just cover technology stocks, or do you cover the whole market? We actually cover the whole market. Just turns out that technology stocks have been the top performers for the last 40 years. So we have a very heavy weighting. The market weighting on tech stocks now is about 30%. We have at least a 50 or 100% weighting. Most of the time, right now, our only positions in tech stocks are shorts. We have a short in NVIDIA and a short in Tesla. And then we have 8 domestic, interest sensitive plays on the long side. So we're 80%, long and 20% short, and all 10 of those positions are working. The shorts on NVIDIA and Tesla are only for 4 weeks. So, and we're very deep in the money on those positions. So they're very low risk. And I expect to make about, 40% between the two of them. Okay, any other questions here? Okay, all right, David. Well, I think I'm just about out of time. Thank you for inviting me, and look forward to working with you again in the future.